If you guys have seen my recent videos, you guys know that I've been trading SPY credit spreads a lot more often recently. Credit spreads are my favorite tools to day trade with because I have to work a full-time job. It allows me to work around that time restriction where I have to go in the office at 8:30. It's just due purely to the fact that instead of needing to sell my options or my stocks to extract my gains, I can just let them expire, right? And it'd be a lot more hands-off with them. So today, we're gonna take a look at my weekly results and the trades that I took this week in rapid succession. I took $1,000. I was able to make $810, which is an 81% profit, which is more than enough to feed my cats. Here are all the trades that I took this week. As you guys can see on my Thinkorswim platform, I only traded SPY credit spreads on Monday all the way to Friday, March 6th to March 10th. The only day I didn't trade was Tuesday, which is the first day that Jerome Powell spoke to Congress. I don't like trading those super volatile days because it's really hard to find a good entry and the market can reverse just due to emotional sentiment on every word that Powell says. So on Monday, 407, 408 call credit spreads. I collected $37 of credit per spread. I traded 10 of these spreads for $370 of credit. I got stopped at $6 a spread, which means I made $31 per spread with $310 overall on this one trade. Another one on March 8th was 397, 396 put spreads, 10 of them, $1,000 collateral at $27 a spread. So I credit $270 and I exited them at $15 a spread for a profit of $120. Then on March 9th, I took a 402, 403 call spread for $24 a spread. And that one was able to expire out of the money for a max profit of $240. And the last one was on March 10th, a 387, 386 put spread for $25 a spread. And I got stopped at $11 a spread for a profit of $140. Sum that all up, and it's a pretty solid week, $810 of profit. Some weeks are better, some weeks are worse, but this is one of my better weeks, and I wanted to walk you guys through this week because I trade a lot of different strategies, both on the call sides and the put side, and I thought it'd be interesting to take a look at it. If you guys are interested in a tutorial of my system about how I day trade SPY credit spreads, make sure you guys check out this video where I go really in detail about the strategy, how I enter trades, how I stop myself out with a lot of examples. So let's get to the technicals of it, and I'll walk you guys through each and every single one of these trades, some in more detail now. Friday, Thursday, Wednesday, Tuesday, Monday, right? And we're gonna look at about why I took the side that I did and what indicators I'm looking at. This is my normal setup, but for simplicity's sake, we're just gonna do it on one chart and we're gonna drop it down accordingly. So we're gonna zoom in again here, and we're looking at these 5 days right here. So we're gonna scroll back to Monday. There's going to be some conflicting information that you're going to have to discern, right? I think when you guys are trading, you guys see some bearish signals, some bullish signals, and you guys have to kind of decide which one it is that you guys want to take. And so when I look at this, you can see that there are some bullish trends going in. There is a low to a high to a higher low that formed on 3-2, and now it's inching up, right? It could potentially form a higher high, and that's a continuation of the short-term bull trend, or it can reverse off of this 20-day moving average, which has historically acted as resistance and supports, right? You can see that this is a resistance here, resistance, support, right? Resistance, support, support. Overall, it's in a downtrend, right? The 200 period moving average is down. And so you have the long-term bear trend, you have a short-term bull trend with a lower high, with a higher low that formed, and now you're inching into this potential area of resistance. So what do you do here, right? On this day, you guys know I took a 407, 408 call credit spread on a bear side, but now I got to understand why I took that trade. So what I do is I just drop it down to another time frame. We'll just go to 1 hour. We're looking at this one right here. This is Monday, Tuesday, Wednesday, Thursday, Friday. One thing that I like to note here is that the run-up for RSI is really hot on the 1 hour. RSI is overbought. It's at 77. So that could be an indication that it could reverse. But you can't just take that as a signal because you see back on Friday of the previous week, RSI is hot here, but it never reversed, right? It kept going down. And so what we're looking for is, hey, it could potentially reverse, but we got to look for the criteria of entry, right? If you guys are long-term viewers, I do this MAC principle, market trend area of interest and criteria of entry. And so we've entered an area of interest because we're at the 20-day period moving average, and RSI is really hot. And now we're just looking for a criteria of entry to allow us to enter this trade. So you drop it down to 30 minutes, you can see RSI is definitely going to be hot here. Definitely. So you can see right here it's really hot. And one thing to also note that you're really far extended from any moving averages. So theoretically speaking, you should always retest the moving average to continue the trend. Calls seem very likely, but we're going to look for an entry for a call side play. And I like to trade on the 5 and the 1. And so I drop it all the way down to 5. And this is, RSI is also, again, really hot here. Makes sense, right? Because it's hot on the 5 for 1 hour. It's hot on the 30. It's running overbought on the 5. And so I'm just looking, waiting. And again, what I'm looking for here, criteria of entry, is market structure or even candlestick patterns. Market structure indicates like a double top, a high to a low, to a lower high, to a lower low, right? Or I'm looking for large body candlesticks, engulfing candlesticks with large volume, things like that. So I'm looking for those. I'm looking. I didn't find it. It's not good. I'm looking. Nothing here, nothing here, nothing here. And around 8:15, around 8:20, I see this. And this is getting me intrigued, right? I'm like, okay, this is a large body with good volume. RSI is hot. It was hot. And so, okay, this could be a good potential, right? And remember, I have to go to work at 8:30 on this day. So I have to decide whether or not I want to take this trade. I don't have the luxury of letting this play out, right, at 9 or 9:15 or 10 o'clock or 11 o'clock. Is this enough of an indicator for me to play? And I see here, this is a high, right? This is a top. It went down. It hit this thing again, right? And it basically indicated that this is a double top. Now, what I'm looking for is whether or not it's a double top or an ascending wedge. And so this candlestick for me here, I'm looking for it to break past this low on this area. And on this next candlestick around 8:25, it did. Okay, and so for me, that's good enough. I go to work at 8:30, so I have to leave. And so on this candlestick right here, I'm like, we're going in. And so I took this 407, 408 trade, basically at the money, which is great because it's $37 of credit. And so I went to work. Because I can't actively manage it, I set my stop loss at 100% of my loss. But if I were able to manage a little better, what I would do is I would set it as this level right, 407.42 plus 1 ATR, which is 0.45. So I set it at 408. So whenever it passes 408, I would get stopped out because I'm basically I'm trading this double top here. Okay, and essentially what happens, as you can see, as the day went on, it sold off. And then every time I have a chance to, I move my stop loss up accordingly. Make sure you guys check that video out if you guys haven't seen it. But basically, when it hits 50%, I set it to break even. When it's 25%, I set it to 50, et cetera, et cetera. And 11.15s, I guess a rebounded here, and so yeah, 405.36. So I got stopped at $6, which is fine. Okay, so that's Monday. You can see the logic there, right? I'm looking for a trend, I'm looking for an area, and I'm looking for entries or criteria, which I found with this market structure, this break of market structure, past this lower low. So if you guys like in-depth details like this, where I show you guys not only the trade, but the rationale and how I took these trades, make sure you guys like the channel so that you guys can see more of these concepts. I'm trying to provide you guys with as much of my thought process as possible. Make sure you guys subscribe, really help the channel out. This is Monday, Tuesday, and Wednesday. We didn't trade Tuesday. Wednesday is the day we trade. And now the situation has kind of changed. This is a very classic pattern. Low to a high to a large low, right? And this shape, just remember it, it's a very common pattern. So now what that tells me here is that the market, at least in the short term, is selling off. Okay, so when Wednesday opens, I can either, if I do trade on the bullish position, I probably have to be really, really quick, which means that I get in and out. If I'm trading the bear side, I can probably sit in the trade a little longer. Okay. And so we'll drop it down to 1 hour. And you can, Friday, Thursday, Wednesday. So looking right here. Tuesday, large sell-off. Wednesday is right around here. But as opposed to Monday, where it was RSI running hot, RSI cooled off significantly, right? On Wednesday, you're looking at RSI of like 40 as opposed to 70 something. Maybe a bull side play because RSI is running pretty cool, but we have to wait for an area for us to retest. But right now, there's no good areas, at least in my opinion, on the 1 hour. Maybe this 20 period moving average here, or 50 period moving average, apologies. But that's not that. We don't know that yet. I'm looking for an area to trade in. And so we're going to look at Wednesday and not that much. In that case, what I do is I drop it down to the 1 minute. And 1 minute is usually not my favorite time frame to trade at because 1 minute there's not much volume on the 1 minute. So usually the trends that hold don't hold too much. You can see that on the 1 minute when it opens, the day shot up. We'll zoom in a little bit. So you opened up, went down, went up, it went down, and went up again. You can see this 200 period moving average, 200 minute moving average, I guess, here is acting as resistance. It goes all the way down, and then a large buying on that candlestick. So you can see a lot of buying power at 397, right? You can see this is a large engulfing candlestick, but also a large selling at 398. And correlate that to the 5 minute, right here, zoom in again. And you can see this candlestick right here, because this 50 period moving average on the 5 basically is the 200 period moving average on the 1. You can see that kind of correlating. So around this time, I'm looking, and what I'm looking for again is a break of market structure. There's a low to a high, right? You can see this high is the same as previous, this high, high, high. And then it looked up and I'm like, okay, well, is this gonna be a double top or is it gonna be an ascending wedge or is this a fake out? I'm looking, and it went down and boom, right around this time, I'm looking at it and I'm really interested now because it's entering an area where it could form a higher low. You can see there's a large volume here around this area and it's pushing it up. It comes back down. And if it forms a higher low than this area, then I'm good to go. So I'm interested. It looks like I can trade the 397, right? And so I entered right around here, right around 720 is when I entered. I probably entered a little bit too early in all honesty. It formed a lower low and it started shooting up. And you can see the reason why, right? It formed a low to a high to a lower low. And now it seems like it's an ascending wedge, right? It's wedging into this area. You can also tell why I set it at 397 and not any other number, because 397 is the low of the day. And there's a large buying power off of 397. I know that for a fact. And so instead of being really aggressive at 398, because I don't exactly know if this is going to hold, I went to 397. And the day played out, went up and went up. Remember, I go to work around 8:30. It's going up, right? High to a low to a higher high to a low. It broke this top. I'm like, great. It wedged up and it broke it, right? But all of a sudden, you're looking at it at all times and you're like, hey, wait. What I would expect this to do is that it would test this area again, and then it would bounce up this way. You see where my cursor is? It would bounce up, but it didn't. It broke right down, and I'm like, this is weaker than I expected, right? And like I said, because that U shape, that reversal pattern that we talked about, if I wanted to trade bull, I would have to be really, really quick. An exit that I wanted to take was around this 200 period moving average on the 5, but it never hit it, right? And so if you go back down to the 1, you can see that it's quite weak. And so I'm trying to get out. I'm like, this is not what I'm looking for. I didn't sign up for this. Again, I go to work around 8:30. And so right around here, 8:25, I remember, is going up. I'm like, okay, maybe as it goes up, it might form again a higher high or maybe into this 399 level. So I'm looking at selling off at 399.6. But then it started getting really weak again. ATR is getting lower. And it doesn't seem like there's a lot of buying power. There's not a lot of volume. If you look at all the red candlesticks, has larger volume. And so it's just like not looking very good. So at 8:25, as it enters this area again, on one of these green candlesticks, I'm like, I'm just gonna get out. I sold it for a debit of 15, and so I made $12 on the trade. And if you look at the reasoning why, right? Because the market just looks really, really weak. You'll see this very, very obvious on the 5. It goes up, it goes down, formed a lower high, but then it failed to form a higher high. It didn't form this thing, and so around 8:25, you can see it's struggling to get up there, struggling. And so I decided that I was just gonna cut and take my profit. I wasn't gonna gamble it. So at 8:25 on this candlestick, I'm like, I'm out. It's fine. I made $12 per spread, good enough. And as you can see, like it went up, it went all the way back up to this level again, like I was hypothesizing, and then it just sold off in the day. It ended the day at 397.27, right? Which means I would have made max profit if I had not sold out, but you never know what's gonna happen. We'll keep talking about Thursday and Friday real quickly. Thursdays I traded 402, 403 calls. Mainly, again, if you look at market structure, it went up, it went down, it went up, double top, similar pattern, right? We won't talk too much about this, and essentially just rode it all the way down. Super easy. Like I wish I can trade more actively. I wish I didn't have to work, but you can see there's a lot of entries here. You can enter right here to upsize your position. You can upsize here. There's a lot of upsize potentials, especially in these 3 areas right here. Once that 20 period moving average crosses the 50 period moving average, that's a great signal for you to enter again at 9:30. But again, I don't have the time. So I took that trade and I set my stop limits and just went all the way down. Super easy to trade. And then the last day, I think on Friday is probably the most interesting one. We'll just go down to Friday. It went up. RSI is really cold, oversold on close of Thursday. So I'm like, maybe, hey, we can trade on the bull side. Again, if I'm trading on bull side, I got to be quick because the trend is down, right? If again, remember, Monday, Tuesday, Wednesday, Thursday, large sell-off, and Friday, right? So the trend is down. You're now forming a lower low. You've broken past this, and so highly likely that the downtrend continues because the sell-off is going to continue. And so on Friday, this is Friday, obviously, you didn't know Friday is going to happen, but you're thinking here on Thursday, it probably will go down. And so you go back to the 5, because I was trading on the 5. You go here, you're looking at it, and so we'll just scroll here. We came back down, low, high, up into this area, came back down, so it formed a lower high, right? And on this candlestick right here, because it formed is a wick. If you compare the wick here, the high of the wick and the low of the wick are higher than the previous wick. Again, I have to be quick because the 200 to 20 period moving average is acting as resistance. Ideally speaking, I probably could have been a little bit more patient. I thought this was a good entry, so I waited till 725. I'm like, okay, it seemed like it formed a lower low here. And then again, I'm really cautious, right? I set my stop limit here, stop loss, my exit strategy right below that, 1 ATR below that, so basically around 387. If it ever formed a lower low, I'm out. And so essentially, because I don't want this to form this, right? You can see the pattern here, a line here, and a downward trend here. That's not what I'm looking for. And so it went up, it went down. I'm really active here. I don't want it to break this level because this looks like a descending wedge. And then all of a sudden, right, at 755, it went up. It went up, it went up. And so I started moving my stop losses. Stop losses looked like it was doing really, really well. Looking like it was doing really well. And then so my stop loss, because I'm trading more actively, at this point, I'm like, okay, as long as if it ever breaks my 20 period moving average right here on the 5, I'm out. I'm just going to get out of it, right? And that's essentially what I tried to do. I set my stop limit at $11 as it continued to move up more actively, and I never deviated. So I went to work at 8:30 again, and boom, within a couple that trailing 20 period moving average, because I'm trading bull into a bear momentum, I have to be quick. So I don't care how much profit I make as long as I make profit. The idea there was if the day was fast enough, I could maybe trade 2 times in a day, because ultimate goal is I want to trade bear because the trend is down, right? I'm just letting the market reset a little bit, but I didn't get there. And so theoretically, right, I got stopped out here. I got stopped out at $11. I made $14 per spread, $140 on that day. But theoretically, what I would be looking to do is once a break of structure, I will be looking for a retest. And then once maybe you can trade here, you can even trade here. And once it retested it, you can just ride it all the way down. But you can see I traded in all different ways. The principle remains the same, MAC, right? What's a trend, what's an area of interest, and then what is a criteria of entry, right? A lot of times I trade candlesticks, and more often than not, I trade market structure. What is the structure that I'm looking at? Because it tells me a lot about the market psychologically speaking. You can see the rationale behind all 4 trades, but you can kind of understand my mindset, what I'm looking for, how I decide to trade, and why I decide to exit. Knowing what I'm trading, knowing what can cause me to lose money. If you guys like this content, please do like and subscribe. If you have any questions, please do comment down in the comment section below. Stay safe in the market. The market's crazy, especially with the bank run that's happening recently. Stay safe in the market. Until next time, peace.